Hi friends, how are you? By blessings of the God, you are doing well. This is Dr. A B JENA. Once again, I am welcoming to all of you to Dr. A B JENA classes. This is Dr. A B JENA, Senior Assistant Professor, PG Department of Business Management, Fakirmon University, Basar Bihar, Balasore, Odisha. And today, we are going to discuss the very interesting topic, and the topic is related to the working capital management as a working capital management is the part of the financial management. Okay, so dear friends, so without delay, we will start our discussion. Okay, working capital management. So WCL, it stands for working capital management. So before discussion, kindly you take the screenshot. Yes. So, as we know, there are the three important decisions in financial management. Three important decisions before discussing the working capital management. What is the meaning of capital, fixed capital, working capital? So let's have a little bit discussion about what are the important decisions normally being taken by a finance manager. So here, so you assume that you are all the finance managers. You assume that you are all the finance manager. Okay. So what is FID? So these are three important the decisions normally a manager takes. FID. F stands for financing decisions. I stands for it's the investment decisions, and D stands for it's the dividend decisions. Once again I am repeating, F stands for that is the financing decisions, I stands for the investment decisions, and the last one D it's the dividend decisions. Okay, so the investment decisions. So investment decisions here the manager will decide so how much fund will be invested into AFS. AFS means that is the fixed assets, and how much funds will be invested in the current assets. Current assets. AFA it stands for fixed assets. CA stands for the current assets. Okay. So about the current assets, later we'll discuss. So what is the meaning of the capital? Okay, so far as the working capital is concerned, the working capital plays in a vital role in the business. So there should be the adequate or the right amount of working capital. Otherwise, the business will suffer, or the business will go for the insolvency positions or the bankruptcy positions. Okay, so that's why the working capital is very vital to the business organization. Yes. So working capital plays in a vital role. So working capital plays in a vital role is just like the role of a heart in the human body. You know, heart is the important organ of a human body. If there will not be the proper functioning of the heart, then ultimately the man will be no more. Okay, आदमी मर जाएगा. So capital. What is the meaning of capital? Amount. Capital means the amount or money or fund or money which is invested in a business. BUS business is known as capital. Capital, once again I am repeating, the amount or the money or the fund or money which is invested in business is known as the capital. What are the different types of capital? Normally there are two types of capital. First one is that is fixed capital, second one is that is the working capital. So we will discuss one by one, and in this video lecture we will discuss in detail what is the meaning of working capital and what are the different concepts of working capital. Similarly, what is the importance, need or necessity of working capital. Today we are going to discuss in detail. So I will have a request to all of you, just you spare 12 to 15 minutes, you will know more and more, and the discussion is going to be very interesting. Yes, fixed capital. Fixed capital, what is the synonyms or the name of fixed capital? You can say that is the FA, fixed assets, or you can say the capital budgeting decision, or you can say that is the long-term investment decisions. What is the meaning of a fixed capital? Fixed capital, the amount or the fund which is invested in fixed assets or the long-term projects to enhance the earning capacity of the business. The examples of fixed capital, it's the at the time of starting the business, you must need, or each and every type, each types of a business organization, they must need what the fixed capital for the purpose of investment in where the land, building, machinery, equipment, etc. to start the business or for the production purposes. Yes. Second one type of capital, it's the working capital. What is this working capital? It's also known as, that is the investment into CA, current assets, or we can say short-term investment decisions. What is this working capital? So I have written three meaning of the working capital. So you have to remember anyone, or it will be better if you will remember three meanings of the working capital. So working capital refers to the gross working capital. Gross working capital. So here that means the working capital is divided in two parts. First one is it's the gross working capital. So it's the opposite of gross working capital. It's the net working capital. So later we will discuss. Gross working capital, which represents the amount of a fund invested into current assets. I mean the working capital, the short-term investment decisions. So these are the examples. So the investment, it may be part of the working capital: cash in hand, bank balance, inventories, BR, it stands for bills receivable, etc. Or working capital is the amount of funds necessary to cover the cost of operating of the business. Then we will cite one example, then you will be clear. Or working capital refers to the short term. ST, it stands for short term funds which are needed to meet the operating expenses of the business. Okay, dear friends, come to this example. Suppose you have a car, or you will purchase a car, or you will purchase a building, or you will also purchase the very good smartphone, or you will purchase a bike. Yes, so these are the fixed capital, fixed assets. Fixed assets, yes. For a day-to-day operation, you need the fund. Yes, for driving the car, for driving the bike, what you will need? The petrol or the diesel. The petrol or diesel, the car or the bike. Okay, you cannot drive without the petrol or the diesel, or in some extent you have to also consume or avail the CNG. Again, suppose you have purchased the smartphone, very good smartphone, so you need, what is this, the voucher or the mobile data. Yes, or similarly for day-to-day life, we are what? We need the food, we need the clothes, we need also the medicine. So these are the examples of the, okay. So that's why you will need the working capital. So I am hopeful now you are clear. Okay. Then what are the concepts of working capital? So concepts of working capital, there are two concepts of working capital. First one is balance sheet concept, and the second one is it's the operating cycle, or we can say it's the circular flow concept. The balance sheet concept is again divided into two parts. First one is concept gross working capital and the net working capital. So we will discuss one by one, dear friends. Okay, friends, now we will discuss the second part of this video lecture. We have already discussed the first part of the working capital management, and now we will discuss what are the concepts of working capital management. Concepts of working capital management. So there are two concepts of working capital management. First one is it's the gross working capital, and you can also tell it's the quantitative or the circulating capital, and the second one is the operating cycle or the circular flow concepts. Okay, so dear friends, I am requesting to all of you, kindly you take the screenshot. Okay, so working capital is a very vital. Without the right amount of working capital, then the production process will be affected. If there will be the production process will be affected, so how the finished goods will be sold, and how the business organization will, or a firm or an enterprise will get the revenue. So that's why working capital is very vital. So that's why just like it's the heart of a human body. Yes. So gross working capital, what is this? So gross working capital means just you recall the balance sheet of a final account, entire the current total current assets of the balance sheet is known as the gross working capital. Okay, so it is the capital, gross working capital, it is the capital which is invested in total current assets of the business. Once again I am repeating, dear friends. So current gross working capital is equal to, what is this in mathematical equation, total current assets. So gross working capital is equal to, what is this, total current assets. I am hopeful now it is clear. Then what are the components of the current assets? Current assets, so these are the cash in hand or bank balance. DR, it's the bills receivables and sundry debtors, then short-term loans and advances, inventories. So what is the meaning of inventory? So inventory is equal to, what is this? Inventory is equal to raw material plus work in progress plus spare and store and spare parts and the finished goods. Okay, finished goods. Yes. So inventories consist of what? The raw materials. So raw materials are must. Without raw material, right amount of raw material, then the production process or the production cannot be possible. Then the raw materials will be converted into work in progress. Yes. Then the work in progress will be converted into finished goods. So these are the components of the inventory. Then the short-term investments in the short-term investment of surplus funds. Yes. Next, that is the prepaid expenses. What is prepaid expenses? The expenses has not been due, but your business or you have paid the expenses. So this is the component, or this is the example of current assets. Then accrued incomes. What is the meaning of accrued incomes? We know about the income, but accrued income means the income has not been due, or the income which has not been due, but your business or you have received the income. The income has already been due, but your business or you have not received. So it's the accrued incomes. Come to the second part. It's the net working capital. It's NWC. NWC means the net working capital. What is this? It is the excess of current assets, CA current assets over CL current liabilities. So in mathematical equation, easily you can remember net working capital is equal to, what is this, current assets minus current liabilities. So here the question definitely will have the doubt, what is the meaning of current assets. So current assets are those assets so which are converted into ready cash within an accounting period. Accounting period means within 1 year, without facing the much difficulties in order to pay the current liabilities. So what is the meaning of current liabilities? Current liabilities are those liabilities which are payable or which is paid by the business within an accounting year. I mean here in 1 year. So that is the net working capital. It may be the positive or it may be the negative. Just by citing the example, suppose current assets is, let's take an example, it's 10 lakhs. How much? It's 10 lakhs. And current liabilities, it's that is 8 lakhs. 8 lakhs. As per our mathematical equation, so what would be the current assets is equal to how much? 10 lakhs. Okay, rupees how much? 10 lakhs minus current liabilities is 8 lakhs. So 8 lakhs, 8 lakhs, 8 lakhs. So here, so the difference is that is the 2 lakh. So 2 lakh is that is the favorable net working capital. And the question is, so there should be the right amount of working capital. It should not be excess or it should not be the low. If there will be the excess, then there will be the problem in with regard to that is the generate the revenue. So it's that is the ideal investment. I mean the excess working capital will be or has been financed from the long-term sources. If there will be the negative means here, suppose current assets is 8 lakhs and the current liability is 10 lakhs. So here, so there will be the negative result 8 lakhs minus 10 lakhs. So it's what is this? Minus 2 lakhs. So it's that is the negative or unfavorable net working capital. If there will be the negative net working capital, then the organization will suffer. I mean in the organization will not pay the amount in due time or the right time to the creditors. Also other day-to-day expenses of the business, it may be the salary, wages, commission, etc. and other expenses. Yes, so that's why the business must maintain the right amount of working capital. Yes, what are the components of current liabilities? I have already told you what is the meaning of current assets and what is the meaning of current liabilities. So it's the bills payable. So bills payable, then the sundry creditors. So you have to pay the amount to the creditors, I mean the suppliers of the money, or you have purchased the raw material in a credit, so you have to pay or the credit sundry creditors. You can also, it's also known as accounts payable. Then the short-term loans. So short-term loans, which is your business raised from outside, and it's you have to pay the short-term loans within one accounting period. Similar the dividend payable. So income receipts in advance, and income has not been due, but you have receipts in advance. So this will be the part of the current liabilities, and it's also O/S is the outstanding expenses. So outstanding expenses means what is this? The expenses has already been due, but you have not paid or your business has not paid. So it's the outstanding expenses. Bank overdraft, BO, bank overdraft. Then the provision of a taxation. What is the meaning of bank overdraft? So bank overdraft is normally it's a facility is given by bank to a customer, normally to the businessman, that the businessman or the customer can draw the over amount than the deposited amount. Okay. So by citing the examples, let's take an example. Suppose you are a businessman in your bank. So let's take an example. Deposit amount is how much? 20 lakhs. Yes. Then the bank will provide you with the overdraft facilities. So here how much you can draw? More than 20 lakhs. You can draw what is this? 21 lakh. Okay, 21 lakh. So it's it's known as the bank overdraft. I am hopeful by citing this example, then now you are clear. So in this situation, the differential amount rupees 1 lakh. Rupees 1 lakh. So as per the terms and conditions between the customers and the bank, so bank will charge the interest on bank overdraft, then the provision of a taxes. Okay. Come to the second one, concept of working capital. It's the operating cycle. It's known as what is this? The circular flow concept. What is this? The funds or the money thus invested in current assets. Current assets keep revolving fast and are being constantly converted into cash. And again, and the cash flow out again in exchange for other current assets is known as what is this? The revolving and the circulating capital. In competitive examination as well as in your exam as well as in UGC, so frequently the operating cycle, the circular flow concept question is coming. Okay. So this is the working capital cycle. So first one, the revolving. So it's the process. Okay. Again and again. So first one is the cash. So cash, after getting the cash, what would be done? Then you will purchase the raw materials for the production. Yes. After getting the raw materials, then the next work of the business is what? The raw materials will be converted into work in progress. Yes. Then the work in progress will be converted into the finished goods. Yes. Now the finished goods are ready, and your business will sell to the consumer or the customer. Then the finished goods will be sold. The finished goods will be sold. And you know, so there will be the sellings. After selling, then you will get the revenue. The sales, your business may sell. Suppose all the finished goods will be sold in cash basis. Then here again the cash. If your business or you will sell the finished goods in credit basis. Then here what is this? The debtors. Then you have to get what is this? BR means that is the bills receivables. So it's that is the working capital cycle. So again I am repeating. So cash is there. The cash, the raw material will be purchased. Then the raw material will be converted into work in progress. Then the work in progress will be converted into the finished goods. Then the finished goods will be sold either in a credit. If it's a credit, then you will receive what is this? The bills receivables from the debtors. Debtor means the customers. Again the bills receivables will be converted into cash. So this is the working capital cycle. Okay. Now we'll go ahead towards the last part of our video. Okay friends. So now we'll discuss the last part of our discussion. Let's say what is the need? What is the need or necessity or significance of working capital, or the importance or the objectives of working capital? Yes. So dear friends, so before discussion, kindly you take the screenshot. क्या बात है? Okay. So the working, if there will be the right amount or the sufficient working capital, then the business organization can purchase the raw materials and components and the spare parts for the production unit. Yes. Second one, the need or the significance of working capital is that is the business organization or a firm can pay the wages and salaries in due time to the employees as well as to the labor. Then the organization will spend the day-to-day expenses of the organization. Okay, so day-to-day expenses, it means the salary, commission, wages and other, that is the rent, taxes, etc. Yes. Next, the organization will also pay the selling cost. Okay, will pay the selling cost. So what are the selling costs? It may be the packaging, it may be the advertising expenses, it may be the other promotional expenses, it may be the sales commission, sales remuneration, etc. Yes. Then if there will be the right amount of or the good amount of the working capital, then the a business firm can provide the credit facilities to the customers. Yes, the credit facilities to the customers. As we know, the business has to adopt both the credit, the sellings in cash basis as well as the credit basis. If there will be the sufficient working capital, then the business will pay or will sell the goods to the customer on credit basis. Yes, so credit facilities. Yes, and then the business will maintain the inventories of raw material, then the work in progress. Yes, spares, stores and spare parts as well as the finished stocks. If there will be the maintenance, then the production process will not be affected. Yes, if the production process will be affected, then definitely so the sales will be declined. If the sales will be declined, then the profit or the revenue generation will be less. Then if there will be the right amount of working capital, a business firm can maintain the business firm can exploit the market conditions where, okay, the business can okay, so we'll get what is this, that is the debt capacity. Debt capacity means if the right time Debt means that is the loans amounts. Okay, and the loans amount the business will pay or will enhance that is the debt capacity. If the loan amount will be paid in the right time, then the supplier of the money or the creditor will not be hesitate to provide the finance as the fund to the business, as well as if your business will pay the that is the debt in due time, then you will get what is the goodwill. Yes. Then next one, it's also your business or the business will feel what is this, the high executive morale. Yes. Next, also your business will get the facility, that is the loan facility from the AFIs. AFIs means the financial institutions. Also it will be helpful, working capital will be helpful to increase the production capacity. That means that your business will not face any type of a problem with regard to the production. Next, and the working capital also will be helpful to exploit the favorable opportunities. Again, the working capital management or working capital will also be helpful to meet the contingency. Contingency means that is the problem. Yes, that is the business environment may influence. If you will have the sufficient working capital, so in this situation, okay, you can meet the contingency out of the or through the working capital. Yes. So again, the working capital also be helpful to uphold the cash discount. Cash discount, what is the meaning of cash discount and the trade discount? At last we will discuss. And also the right amount of the working capital will also helpful to give the attractive dividend. Dividend to whom? To the shareholders. If the dividend will be paid more to the shareholders, definitely the value of the farm, as well as that is the market price of the share. Market price of the share will be more. Yes. Then it's very, very vital. If your business will pay more dividend to the shareholder, definitely the value of the farm will be more, as well as the market price of the shares will be more. Then exit the ultimate aim of the financial management. It's that is the wealth maximization. Yes. Next, the working capital will also create the sense of security and confidence. Working capital will also create the sense and security as well as the confidence throughout the organization. And working capital also maintain the solvency position. Yes, it's the very, very important. If the debt amount or the current liability will be paid in the right time, so there will be the better or the good solvency positions. Yes. So next, the working capital will also face the financial crisis. Yes. So business environment will influence the business. So in this situation, if you will have more working capital in this situation, you can also maintain or you can face or you can solve the financial crisis. Further, the working capital also maintains the short-term short-term liquidity position. Short-term liquidity position, I mean, if there is the more working capital or the sufficient working capital, then the current liabilities will be paid in a stipulated time period, I mean within 1 year. Yes. Last but not the least, the working capital, if there is the proper working capital, then the business will avail more cash discount. What is the meaning of a cash discount and what is the meaning of a trade discount? Yes, dear friends, it's a very, very vital. Always you will get the question, what is the basic difference between the cash discount and the trade discount? Yes, cash discount refers to an incentive. Cash discount refers to an incentive that a seller offers a buyer in return for paying a bill before the scheduled due date. Yes, just I am citing the example, then you will be clear. Let's take an example. your business has to pay one supplier, okay, the creditor, I mean the supplier or supplier, let's take an example is rupees, how much? 10 lakhs. How much? Rupees 10 lakh. Yes. If the the supplier will tell you if you will pay within 15 days or 1 month, if you will pay within 15 days, so you will avail how much? Let's take an example is 5% cash discount. In 10 lakhs 5% is how much? It's that is the rupees 50,000. How much? It's rupees 50,000. Then here you will pay how much? It's rupees 9,50,000. To whom? To the creditor. To the creditor. So here the differential amount is that is the 50,000. It's how? It's the differential amount 50,000. It's the cash discount. Yes. Come to the let's say another category of discount. It's the trade discount. What is this? It is a discount. Trade discount, it is a discount that is given by the seller to the buyer at the time of purchasing the goods. Yes. When we are purchasing the goods every day, in MRP, maximum retail price, in MRP or the printed price, the seller or the retailer or the wholesaler, so they are giving the discount to us. Yes. Suppose one product price is, let's take an example, it's 1,000 rupees or 10,000 rupees, and here the discount is how much? 10%. Discount is how much? 10%. So we are paying how much? Yes, 10,000. 10% is how much? 1,000. And 1,000. So and finally we are paying our the billing is how much? Rupees 9,000. So we are paying rupees 9,000 to whom? To the seller. I mean to the retailer or the wholesaler. So it's that is the rupees 1,000. It's known as that is the trade discount. Yes, cash discount. Again I am repeating, cash discount. It refers to an incentive that a seller offers a buyer in return for paying a bill before the scheduled due date. By citing this example, I am hopeful now we're clear. Then what is the meaning of trade discount? So trade discount, it is a discount that is given by the seller to the buyer at the time of purchasing the goods. Yes. So by citing these examples, now we're clear. Okay, mobile handset rate is, let's take an example, is 10,000 and here the discount is 10%. So 10,000, 10% is 1,000. The final after deducting the discount, its amount is how much? Rupees 9,000, and then finally you will pay rupees 9,000 to the seller. So these are all about today's discussion, and this discussion it's a very useful, will be very useful to the 12th standard as well as that is the UG PG students. And thanks a lot to all of you. I am requesting to all of you, if you like this video, kindly you share it, kindly you subscribe it, kindly you forward it. So I am hopeful that you have learned a lot out of this discussion. Once again, thanks a million to all of you.